Good morning, everyone. Thanks for joining us. My name is Michael Kotsamore. I'm your host today, as I often am. Joined by Jamie Tapia. She's our marketing manager over at Geovera Insurance, and she's going to be doing the bulk of today's presentation. We're going to get started in about 30 seconds, so bear with us. Okay, everybody, it's that time. Thank you again for joining us. We're going to get underway promptly just so that we can get you back to writing insurance. I know you're all busy. Hopefully you're all staying safe and finding clean air to breathe with the California smoke if you're located here in California. We hope all those fires get contained quickly. So without further ado, today's topic, as I mentioned, is Geovera. We've got a new platform for earthquake. We've got an incentive, so lots going on that we want to tell you about. I'm just very quickly going to go over a couple of things on our website before handing it off to Jamie. So we've got an article up here on the site that just kind of spells out a little bit about the incentive. To find this at any time, you can use the search function on our website. Just type in Geovera, and it'll give you a list of results. Second one here is the fall incentive. You can see there's other, state-specific info. So we'll just click through on that. And then, of course, there's a big register button here at the top. So if you want to register for the incentive, that'll shoot an email over to Jamie. That's all you got to do. If for some reason you do not have access to the Geovera system yet, you can register right here through this article. There's a little link right here. You also have a link that will take you straight to your dashboard where if you do already have an account, you'll see the button there to launch right into the system. And then down below, we have a few other materials here, some sales materials, and a step-by-step quoting guide for the new platform. So in case you want to thumb through that, it's a very, very nice interactive guide. I'm going to jump over to the dashboard just to kind of segue into Jamie's presentation here. For those of you that have already placed business with Geovera, nothing new for you. You still launch right here from your dashboard and launch right into the new system. So I'm going to turn it over to Jamie. You ready, Jamie?
Yep, I am. Thanks, Michael. Good morning, everyone.
Right.
I want to thank you for your time, taking time out of your day to learn about our newly developed quote platform. Hang on one second. There we go. So everyone should see my screen now. So today I'm going to cover a little bit about who we are as a company, the product pieces of our program, the new quote platform, some top sales tips, and lastly, the sales incentive that Michael mentioned. And I just want to confirm that, Michael, can you see my screen?
Yep, looks like we're good to go.
All right, awesome. Okay, so as you may or may not already know, Geovera is not just an earthquake company. We offer business owners habitational earthquake insurance, windstorm insurance, and homeowners insurance. Geovera Insurance Company is our admitted company and is part of Geovera Holdings, Inc. We are owned by FlexPoint Ford. On this slide, I want to point out some different business segments, financial strength, as well as the importance of having an experienced claims organization that have handled multiple events. So I'm just going to review this with you guys. So we have an AM Best rating reaffirmed in March of 2020. We purchased over $1.1 billion in reinsurance and have upwards of 35 reinsurers. We are the largest private residential earthquake company in California and second largest in Oregon and Washington. We have a significant surplus lines presence in a number of coastal states, which is about 70% of our company's premium. We are a leading surplus lines carrier in Texas, Florida, Louisiana, and Alabama. Geovera has a proven claims paying ability as evidenced in the fact that we were hit in our two largest homeowner states In Hurricane Harvey and Irma, we paid all of our claims and continued to grow. We were actually just hit with about 2,400 claims in Hurricane Laura as well. We do not outsource our claims. All claims are handled in-house. We have 3 claims offices in California, Fairfield, California to be exact, Texas, and Florida. This is an illustration of our nationwide footprint. So in the next few minutes, we will review Geovera and Coastal Select earthquake programs, including coverages and underwriting guidelines. In about 5 minutes, what I'll do is I will pause for some questions if anybody has any questions. So we recently increased our max TIV to $5 million on our comp product, 5.25 for renewals, and on our standard product, we'll write up to $3 million on for new business, 3.2 for renewals. We were capped at 1.9 for many, many years. So we just increased coverage limits, which makes us a market for the higher valued homes now. As you know, or may not know if you're new to Geovera, Geovera products are offered as a combined single limit of coverage for dwelling, other structures, personal property, and additional living expenses. These are some of the underwriting guidelines, as you can see. I'll point out a few here. We do not insure the course of construction. Properties with unrepaired earthquake damage are ineligible, no more than 4 levels, and no subterranean, tucked under, or open first floor parking. This is a side-by-side comparison of our standard and comp products. No coverage for other structures on our standard product. The standard is really just designed to protect the structure. You'll see here $5,000 personal property, $1,500 loss of use. Also, what I'd like to mention is I have a cheat sheet. I can send this over to Michael, and he can send it over to you all. I have a cheat sheet on the Geovera and the Coastal Select products where you can just refer back to it if you have any questions on underwriting or eligibility or products offered. So these next 2 slides illustrate our valuation process, and I do get a lot of questions on how we calculate coverage limits. So this is our comprehensive product valuation process, and I can tell you what we do here is we take the current corresponding homeowner's coverage A, we multiply that by 20% for a demand surge. Those of you who are not familiar with what a demand surge is, it prepares you or the insured for the high cost of recovery after an earthquake. So sort of acts as an extended replacement cost. Let's say there's a huge catastrophic loss and everybody on the block needs a contractor. There's going to be an increase in cost in labor and supplies. So again, this is the comp product. After we've taken coverage A, multiplied that by 20%, we take that number, multiply by 1.717 to determine the adequate coverage amount for other structures, personal property, and loss of use, and we wrap it up into that combined single limit. On our standard product, what we do is very similar. We take the coverage A, we add the 20% for demand surge, and then we add $5,000 for personal property and $1,500 loss of use. All right. This slide shows our deductibles and the credits for higher deductibles. We will always default to the lowest deductible available depending on the area. And this is where I just want to pause for any questions on our Geovera product. If no one has questions, I'll just move forward.
Yeah, Jamie, let's give folks about 15 seconds. If you have questions, you can type those in right now. I have the questions pane open, so if I see any pop up, I'll read them off to you. While we're waiting for that, I do want to say one thing, because a question came through about not being able to register for the incentive. So if you click that link, it's going to try to open your mail program, and depending upon whether you have a default mail program configured or not, sometimes Windows will try to launch Microsoft Mail, which is, believe it or not, another product they have. So anyway, long story longer, if for some reason it doesn't work for you, I will put Jamie's email in in the chat. I'll send it to everybody just so that you have it. All you got to do is shoot over a message, say, hey, enroll me, and you're good to go.
Yeah.
Okay? And so our first question is, can you explain demand surge again?
Sure. So the demand surge protection is, it prepares the insured for the high cost of recovery. Now, it acts as an extended replacement cost on a homeowner's policy. So let's say in the event of a loss, you want to rebuild your home, and the square footage may cost more. Let's say you went from $350 square foot to $400 square foot. We just want to add that buffer on top of your coverage limit to make sure that you're adequately covered in the event of a total loss.
Great. All right. Well, I don't see any other questions.
Make you whole again. Mm-hmm.
That makes sense. I don't see any other questions yet, so we'll let folks. You can enter those at any time, and we'll just press on and address those at the end.
So you know what? I will address a question that I get quite frequently that some of you may have or may get in the future. I get asked a lot, how does the deductible work? How will the policy respond in the event of a loss? So I'll just give you an example. Let's say the insured has a $1 million coverage limit and they have a 10% deductible. In the event of a loss, the policy will not respond until that 10% deductible is met. So they need to have $100,000 in claims and losses before the policy will respond. The insured will not write Geovera a check. The total amount of payout. Let me back up. The deductible will be deducted from the total coverage payout. So they will get a check for, if it's a total loss, they'll get a check for $900,000, 10% less the deductible. So that's a question that I get a lot. There is no requirement to rebuild. If the insured decides they're tired of California, they want to move out, we will pay out on an ACV basis. So that's a question I get a lot of. Wanted to share that with you. And if anyone has any questions on that, feel free to ask. All right. Should we move forward, Michael?
Yep.
Okay, sounds good. So now I want to talk a little bit about our Coastal Select program. Our Coastal Select program is structured like a homeowner's policy, separate limits by coverage type. So each coverage has its own set amount of limits designated, all right? Most of the underwriting guidelines are the same with the exception of degree of slope, no more than 26 degrees, no closer than 500 feet from beach or tidal waves, and we won't take any pre-1955 homes. Also, the max TIV is lower. You can see here we're capped at 1.9 TIV. I get lots of questions on what's the difference between Coastal and Geovera. The biggest difference between the two is that Geovera is the combined single limit, Coastal Select is split limits, itemized deductibles. Here's a side-by-side product comparison of the Premier Security and Condo EQ Protector. We do have a condo product. Split limit product structured like a homeowner's policy, as I mentioned. The Condo EQ Protector is obviously going to be more suitable for your condo risk. I'm going to move forward here. Okay, so the Premier is our comprehensive product, split limits valuation. You can see here estimated reconstruction costs is coverage A. Other structures is going to be 10% of coverage A. Personal property is 50. Loss of use is 20. One thing I want to point out here is that the max loss of use we will pay on our Coastal Select product is $25,000. So you see we have listed up to 20%, but it's most likely going to be capped out at $25,000. That's something to keep in mind when you are proposing a coastal quote to your client. All right, so the security is the standard product. It's really just designed to cover the dwelling alone. We're offering $5,000 personal property and $1,500 loss of use. Keep in mind, Coastal Select is, like I mentioned, the underwriting is a lot tighter. Not all risks are going to be eligible for Coastal Select. And I'll show you on the new quoter, if the risk is eligible for a coastal, we will display a coastal quote. If it's not, then you will not see a coastal quote. So at this point, what I'm going to do is I'm going to switch over to the new quote platform, and I'm going to walk through a quote. Just bear with me 1 second while I log in. Okay, so for those of you who've used our quote platform in the past, the dashboard is essentially the same. So I'll go ahead and click on the Start a Quote tab. So what we've done here is we've eliminated the amount of quotes it takes to get, or excuse me, the amount of clicks it takes to get a quote. You can get a quote in just 3 clicks. So I'm going to go ahead and I'm going to punch in the risk location, and it'll automatically populate when you start typing. If this is a new build, we may not have property records for the risk, and you may need to enter in manually by clicking down here. I want to enter the street, city, state, and zip. So you just click on that to enter manually. So I'm going to go to Start a Quote. All right, here we go. Only 2 pieces of information is required here, the current corresponding homeowner's coverage A and the homeowner's carrier. All entity types are eligible. If you could see here, LLC, trust, estate, corporation. If you're in a hurry and you just want to get the quote, you can skip over the applicant information. You can enter that information if the insured decides to purchase the policy, but for now, we're just going to skip over it. All right, so we ask that you confirm the accuracy of the property details on the left-hand side here in this gray box. Everything looks good to me. I entered in the current corresponding coverage A of $450,000. We have calculated a replacement cost of $376,000. And I will get into that in 1 second. So everything looks good. If you want to edit it, you can go ahead and edit. Let's say it's 2 levels and we've coded it as 1. You can change that. I'm going to close it out to open the page up. Confirm property details. Okay, so this is the single limit of coverage. This is the Geovera combined single limit. Right here, split limit coverage is the Coastal Select single limit product. All right. So you can see the premiums here. We've defaulted to full coverage. So this is the comprehensive product. And if you scroll down below, you will see all of the coverages that are included. And if you keep scrolling, you'll see payment plan options. And if you need to, if your insured has questions on how coverage limits are calculated, we have added this in. So you could always go over that with them on how coverage limits are calculated. So I'm going to scroll back up. We have proposed a coverage limit of $927,000. Now we've arrived here, like I mentioned before, we've arrived at $927,000 by taking the coverage A of $450,000. We multiplied that by 20%. And after that, we multiplied by 1.717 to arrive at this $927,000. So let's say that you propose this to your insured and they say, I don't want to carry $927,000 in coverage. Why don't you show me a quote for $800,000? You have the ability to remove that demand surge. So you can drop the coverage limit. All right. So this is one thing that I don't care for is that pops up every time you recalculate. Okay. So I'm going to scroll down here. Now I have an $800,000 coverage limit. Premiums have changed. Let's say the insured says, no, that's still too high. Show me $600,000. All right. What's going to happen here is we are going to default to the lowest coverage limit available in this case is $775,000. So there's a cap on, there's a limit on how low you can go. And every risk is going to be different, obviously, per the replacement cost estimate. So $775,000 is the lowest coverage amount that you're going to be able to offer your client in this case. All right, so I'll just toggle over to show you limited coverage. Limited, like I mentioned, designed to cover the dwelling alone. We have proposed a coverage limit of $547,000 here. You can also, you can play with the coverage limits. You have the ability to increase coverage limits up to our max, which on the standard, like I mentioned, is $3 million, and on the comp is $5 million. All right, coverage limits or coverages available, payment plans, and how we calculate coverage limits. So now what I'm going to do is I'm going to jump over to split limit, coastal select. So it's essentially the same. Full coverage, we, like I mentioned, we do default to the lowest deductible available in that area. In this case is 10%. I'll scroll down here, and as you can see, other structures is we're giving them a $54,000 coverage limit, which is 10% of the coverage A. Personal property is 50, and loss of use is going to be 20%. But like I mentioned, we're capping out at 25,000. All right, so that's the full, which is actually referred to as the premier. Limited is the security. We only offer 15% deductible, and this is designed to protect the dwelling alone. All right, so pretty much the same for all products. Now what I'm going to do is I'm going to jump back over to split. I'm going to purchase the comprehensive policy at $775,000. All right, so this is going to pop up. If you have reduced coverage limits from what we were proposing, we will ask you to check mark the disclaimer box that the applicant acknowledges that the combined single limit is lower than the combined single limit calculated using the homeowner's coverage A. So disclaimer that they understand that they're purchasing coverage lower than what we've recommended based on the coverage A calculation. All right. So you have the option to send the payment link to the client. You can do that. Send the link over. The insured will, they'll get the email. They will need to enter in the quote number and their email address. And from there, they can enter in all of the payment information and choose the payment plan. They will receive an email confirmation with the transaction amount, quote number, policy effective date, and I think that's it. They don't get a policy number because it is not available for 24 hours. But in this case, I'm just going to go ahead and act as the agent and pay now. I've collected all of the payment information from the agent, from the insured. And this is where, I don't know if you guys remember, but I skipped over entering in all of the applicant information. So I've got to do that now because I'm purchasing the policy. You could skip over anything that's optional. Is the mailing address the same as the property information? Yes. This field right here is kind of finicky. You can only enter in digits. If you try to enter in dashes or anything like that, it's going to kick it back out. So like I said, I'm just going to enter in information that is required. There is no co-applicant. I'll build to applicant, and I'm going to choose full pay. I'm going to turn auto pay on, which means that when the policy is up for renewal, it'll just will automatically deduct and renew the policy. You do have the ability to charge up to $150 broker fee. Choose the date you want the coverage to begin. If we choose 9/2, the policy will be effective at midnight tonight. Go over terms and conditions. Check mark this box that doesn't want to check mark. I think I froze up, you guys. There we go. All right, and hit continue. Okay, so I'm going to just walk through this really quick. Just bear with me. I think that our quote platform is pretty intuitive. You probably could get through it without this presentation, but I just want to make sure that, if anybody has any questions or questions on the products, that I hear from you. All right, so let's see here. Oh, zip code. All right, so state funding account, we're only doing that because we've enrolled in automatic withdrawals. Okay. Okay, so the policy's been purchased. All policies are available via my GeoSource within 24 hours post-issuance. You can pull the policy documents, and the policy will be direct mailed to the insured within 5 to 7 business days. All right, and that's it. So what I'm going to do is I'm just going to jump back over here, and I'm going to go through the rest of this. We've done the onboarding. Let's talk about 3. You know what? I think I'll stop really quick. Does anybody have any questions or comments regarding the new quote platform?
Oh, indeed, we do have a few questions. Here we go.
Okay, let's hear them.
One is actually kind of harkening
over.
Well, we'll see if you need to. First one is kind of going back to the demand surge question. It was basically asking for some sort of a claim example that would illustrate where that would be better to include that. Like you showed how to remove that, that cost and the valuation, but they're just asking about claim scenarios that would warrant that.
Yeah. So I can talk about claim scenarios as relates to homeowners claims and windstorm and hail claims because we haven't had a significant earthquake loss. I can tell you that we do not recommend you decrease coverage limits because we do have the experience to know that in the event of a total devastation that at least 20% a demand surge is going to be needed. For example, the fires that we had in Northern California and Santa Rosa, I spoke with so many agents as part of my territory, and they said that, they needed at least 40% when it came to rebuilding and repairing those homes. So I would say, just because the insured is saying, hey, you have the ability to reduce it, we do not recommend it. If the insured says, I don't want to pay that premium, I think, let's just drop the coverage limit. I don't think it's going to cost that much to rebuild my house. I would say we don't recommend doing that, and the company has the experience to know that, in fact, that at least 20% is going to be needed.
All right. Fair enough. Next question is, if we put 0 in the coverage limit, will it automatically default to the lowest coverage available?
Yes.
Okay.
Yeah.
Okay. Yeah. Let's see. Another question about the requirement. Sorry?
Oh, go ahead. Go ahead, Michael.
Next question is about the no requirement to rebuild when there's a total loss. The question is, does this apply to all properties regardless of whether or not there is a mortgage, or is it only for homes owned free and clear? I'm not sure that would. Go ahead.
Yeah, I think that would be more of that would be between the homeowner and the mortgagee. We do not require the insured to rebuild. Now, what happens between if they're walking away from their loan, then we don't really have any say in that.
Right, they're still going to have to settle the loan either way. So whatever's left over after that, then they can take that and move on and do what they want. So
right.
All right. Next question is: are there options to increase swimming pool coverage? And then there's a second part, so I'll let you answer that one.
Okay, so right now there is no options to increase swimming pool coverage. The max that we're going to pay is $3,000. That's the max sublimit. Now, with that said, we have a new CEO, and he is exploring all options and possibly launching a new product where we will be able to offer increased coverage limits, possibly up to $50,000 sublimits, but that's just kind of in talks right now. So, it may be quite some time before it's approved by the DOI, but it's something to look forward to. But as of now, no, it's $3,000 cap.
Okay.
All right.
So the other question is, when endorsing a policy, do we have to send an email? Do we go into my GeoSource? Maybe you can just speak to endorsements, unless that's covered later, and we'll just hold that one for the end.
Okay. So you want me to answer it now or wait till the end?
Oh, no, you can answer it. I just thought maybe that was in the next section, but yeah, go ahead.
No, I'll answer it now. So you can send an email to info, I-N-F-O, @geovera.com. But it's also really super easy to process the request online by going to policy changes. So you would just log into my GeoSource and go to pull up the policy by using the policy number or insured's name. And as soon as you see the policy populate on the page with all of the insured information, you would go to policy changes. And it's super easy from there. So, there's two different ways to do it.
Wonderful. Okay. So last question, I think, before we move on, is why would someone opt for coastal rather than comprehensive single limit?
Well, I can give you an example. I have an agent who proposes coastal. Essentially, what they do is Geovera comprehensive product is our lead product. We sell, 10 times more than coastal. But I would say if the insured comes back and says, I don't like the combined single limit, I think the deductible is too high on a $2 million coverage limit, then you can go ahead and offer them the split limits itemized deductibles policy. So it's just more of an alternative. And keep in mind that the underwriting guidelines are tighter, whereas our Geovera product, we'll do just about any foundation with the exception of stilts and the subterranean parking, post and pier. And there are no age restrictions, no zip code limitations. So we're going to take just about any risk on our Geovera as opposed to Coastal Select. So I would just keep it in mind for an alternative, and the benefit of us integrating the product on the quoter is that if the risk is eligible, you will see we're going to display a coastal quote. You don't have to remember all of the underwriting guidelines and eligibility, because I know that can be difficult as an agent. I know you guys work with many, many carriers, and to keep up with that is sometimes cumbersome. So just keep it in mind. If we're offering it, you can always, send it over to the insured in addition to the Geovera quote, just so they have an alternative option, and just let them know that the deductible is going to be lower because it's itemized. So we're going to have a deductible on the dwelling, other structures, personal property, and loss of use.
Great. All right, let's move forward.
Okay. So just some top three talking points to get the conversation going with the customer. You can talk about natural disasters, looking at the recent wildfires. We never know when a natural disaster can occur. So you can talk about that, talk about coverage myths. We need to educate the insurers on how the deductible works and will respond in the event of a claim. The home is most people's largest financial asset, and would they be able to fully recover following a large event? All right, and the last one is just with benefits. Benefits of a Geovera combined single limit policy. If they're asking, why do I want to purchase a combined single limit policy? Make sure the insured knows that in the event of a total loss, they do not have to balance the coverage payout at the time of a claim. They can allocate their payment wherever they would like, wherever they need it to go. All right. Oh, this is the fun part. This is the sales incentive program. So as Michael mentioned in the beginning, if you have not registered for the sales incentive program, just go ahead and shoot me an email and say, hey, Jamie, register me. What we're doing is we're doing biweekly drawings through the end of the year where you have a chance to win $50, $100, or $150 gift cards. And this is biweekly. So lots of chances to win here. You will receive a 1 entry per quote and 3 entries per policy issuance. So make sure to get signed up for that. And if you guys want to take any of this information down, if you ever have any questions, you can call the call center, customer service, 800 phone number is here. Make sure that you keep info at my GeoSource available for policy change request, or go online to my GeoSource.
Hey, Jamie.
All right. Yeah.
Hey, Jamie. I think
yes.
I think there might be an A missing from your email there. I did drop your email in the chat to everybody, so they should have it.
Yep.
Just in case you jotted that down.
Yep, I'm going to change that right now. Thank you for pointing that out.
No problem.
Wow, I can't even catch the spelling on my own name. A misspelling on my own name? What's happening here? Okay, there we go. I changed it. All right, so that's all I have for you guys today. I just want to thank you again for your time. I know that you're really busy and your time is precious, and I really do appreciate you joining today. And please feel free to reach out to Michael or shoot me an email with any questions in regards to products. If something comes up later that you forgot to ask, just feel free to reach out.
All right. Well, I see a few people thanking us. I don't see any other questions coming through, so maybe we crammed those all into the midsection. So, Jamie, thank you so much for your time and your expertise here. We appreciate it, and good luck to everybody in quoting and winning some prizes along the way. The incentive, I believe, runs the whole rest of the year, right?
Yeah, through December 31st.
Okay.
We're doing
great.
our
so you got
drawing is on Friday.
Awesome.
So we're doing our first drawing on Friday.
Awesome. All right. Well, everybody, back to writing insurance. We'll see you next time. Thanks a lot.
Have a great week, everyone.
Bye-bye.
Bye.